back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, the Direxion Triple Leverage Semiconductor Bullish ETF, which goes by the ticker symbol SOXL. Make sure you're following us on X at the handle Bullish Chips. You can get real-time updates to our entries and exits on not only scalps and day trades, but mid and long-term swing trades as well. Make sure that you hit the subscribe button and the notification bell here on YouTube. That way you can be notified whenever we release our nightly videos, as well as the weekend weekly wrap-up videos as well. If you like today's video, make sure you hit the like button. It's free and helps us grow and helps us build this community of like-minded individuals who want to create a revenue stream from earning profit on options trades dealing with the ticker symbol SOXL. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view at the price action for SOXL, not only in the current day, but in the past, and where we think that price action will take us in the future. So without further delay, let's get into the charts. Today is Wednesday, July 23rd. Right now we're looking at the day chart. I'll make this a little bit bigger here. And we can see that we finished almost a green hammer, kind of doji-ish, but we did make a lower low on the day time frame, which also made a low, broke below last week's low. So we did go 3 or engulfing candle on the weekly bar. Let's go ahead and bring up the week chart so we can see this week we did go 3 because we did go above last week's high and we did go below last week's low. So we created an engulfing candle, or if you're part of the strat community, we call that a 3. And you can see that earlier this week we rejected off of the week flip, which we continue to talk about. Or I'm sorry, not the week flip, the year flip, which we continue to talk about at 28.13. And we got pretty close today to hitting the month and quarter flip as well, which is 24.38. So we're still watching for action to the downside. We've got this monthly downtrend line right here, this green dashed line, and this weekly broadening formation that's right here with this purple solid line. We can see if we go back to a daily broadening, the daily chart, the day has created a broadening formation where we got a higher high and a lower low. We got a higher high and a lower low, so we're still within the broadening formation. It hasn't widened per se. I mean, it has, but it's started to narrow a little bit. There we go. So the latest daily broadening is much more narrow. You can see we closed right up against that monthly downtrend line. So although we did close the day green, we could see further downside action. We could get a 2 up tomorrow. We did finish the 4 hour and a 1 2 down 2 up. Oops. Let's go to the 4 hour. So you can see we had the 1 2 down 2 up. So it started it. It hasn't completed the strat. So the magnitude would be the high of the candle to the left of the 1. So this 2 right here, which has a high of 27.28. That's what our magnitude would be for the 1 2 down 2 up strat. So if this continues tomorrow morning, we'll get the 1 2 down combo 2 up strat. If we reach magnitude on that strat, not saying that we'll stop here and reverse, but if we do, this would be the place that we would probably stop. This puts us right back up against that weekly broadening formation right here once again. And if we do turn back down, say for like a 2 up 2 down, 2 down being the second 4 hour candle of tomorrow, even if we don't go make a lower low, at that point we have started a downtrend, because we will have a lower high at that point following a lower low. So it'll just be the beginning stages of a downtrend, but it is on the day chart. So that's something we want to take note of, because we really hadn't seen a downtrend form in the day chart, because even here when it started the broadening formation, we had the higher high, the low, I'm sorry, the lower low right here, but it was following the higher high. Then once again we went up here. You know, we had a soft lower high, I would call it, because we got a high and a low in one candle. So I mean, it's something to take note of, but I don't necessarily count this as a higher low in the sense that this would be a higher low from this. So we did break below the soft higher low, and we did make a lower low. So it, if we don't count this three candle as a higher high, I'm sorry, a lower high or a higher low, then we would count this as being a higher high. So even though this is a higher high, it was following a lower low, creating the broadening formation. We're still within a broadening formation. So we're just moving sideways, consolidating, and we just want to take note that right here is a location that we could, reject for a lower high on the day chart. If we go back to the day, which would be more solid than the 4 hour, because see here we never had the soft higher low or soft lower high. It just went straight from lower low to higher high. So if we do get the like a failed 2 up here on the day chart tomorrow, which would be a 2 up 2 down on the 4 hour chart, then we're looking at a possible lower high on the day, and then we just wait till Friday. If we get a 2 down on Friday, then we've got a lower high and possibly a lower low, looking to get down to this broadening formation, if not further, because we do have this gap right here from I think it's like 4 Mondays ago now, where we had the gap and go, but that is a threat at this point in time. It coincides with our 50-day moving average. So again, we've talked about in previous videos that even though gaps are magnets, they all like to be filled. A lot of times the first test of a gap can fail, and the top or the bottom of the gap, depending on which way you're approaching it from. In this case, it would be the top. The top of the gap could act as a bounce point, just to make that lower low and possibly go up and make another lower high. Or it could just be expanding the broadening formation, and after making the lower low, it could go back up to making a higher high. So again, we're not in the business of predicting. We're just in the business of determining what the important levels are and being ready with triggers so that we can enter either way, whichever way it goes, we can enter with safe entries and reasonable targets, and give ourselves good risk to reward to make profit. So again, not predicting where we're going to go, but we can see there's plenty of room for more downside. If we're looking long term, big picture, that's why I have it zoomed out on the day chart. We are still in the uptrend. On the week, we're still in an uptrend. The month and the quarter are green still. The week is red, but the month and quarter are green. We're very close to flipping the year green. So it's going to be a tug of war, a battle, a fight, whatever you want to call it, in this area, possibly for a little while longer. And if that's the case, then we can take intraday trades off the bottom and the top of the ranges, right? So we hit the bottom of the range here, that we've been in this little range right here for a little while, 4 weeks. We hit the bottom of it here, and longs calls should be what should be being bought, targeting the top of the range. And once we get to the top of the range, until proven different, we should be getting puts and targeting the bottom of the range. So that 24 to 28 range, it's somewhere you can, whatever strategy you want to use. If you want to do single leg calls, multiple contracts, if you want to do credit spreads, or however you want to do it, you can use that 24 to 28 range as kind of a high low, to give you some barriers there. if we zoom in to just today's action, now that we've kind of looked at the zoomed out picture, if we work our way in, we can see we had pretty good action today. The middle of the day was pretty flat, and made for some, some fake outs in either direction. If you had tight stops, if you had weeklies or anything you were worried about that didn't have time, there was probably a lot of people that got stopped out in a couple areas here just for like an hour or so, where there was some chop, but we were able to capitalize off the downside. If you remember, we were swinging puts overnight, so already off of the bat, we were up because we opened. Let's get down to our day trade chart. We can see opening print here. We opened down, not on a true gap down for the day, but from a close to open perspective, there was a gap down. We knew because of the close to open gap down, and how low the overnight low was, that, well, we didn't know that we were going to get puts, but there was a good chance that we were probably going to get puts. So we went ahead and at the very beginning of the day went down to the 1 minute. Treated this 3 as a lower high. As soon as we broke below the low of this 2, we grabbed puts. We had a target of the overnight low, so we did stay in them. Nothing was really violated on the 1 minute until about here, where we were getting some bounce off of the last week's low. But because it had been, what was this, 1, 2, 3, 4, 5, actually let's just look down here. Since it had already been like 20 minutes into the day, we knew that, if you were going to get that initial push of the downside, that you probably had to sell right there. We had puts for next week, so we had time. We didn't, they weren't weeklies. We didn't have high theta or anything like that, comparative to weeklies, and so we were able to stay in them. And we knew that if it was going to break trend on the 1 minute, it's probably going to do that just so that we can get the 2 up on the 5 minute. Now, whether we're going to fail that 2 up, and continue to go back down was still a question, but we knew that if we were going to stay in these puts, we had to allow for some pullback so that we could get a 2 up, in other words, a lower high on the 5 minute. So we stayed in. We got the 2 up. We're a little bit nervous about it because it was a 1, 2 down, 2 up. So the magnitude would have took us back up to here. Basically, we would have broke even, but it went ahead, went 2 up, tried to go 2 up again, but failed and went back down. So that was a lower high on the 5 minute. When we went down and closed, went down to the, let's get back to the 1 minute. When we went down and made that last thrust, or that, not last thrust, but that second thrust to try and get to overnight low. Where is it? Right here. If you go look at our X account, we sold half of our position right here, just knowing that once it, well, not right here, we sold it at the last week's low, because although it did break below it, it closed green. So we just went ahead, and as soon as the candle closed, we said we were gonna close half the position. If it went 2 up there, it did. So regardless of whether it was just gonna make a lower high and continue down or just bounce from there, we just wanted to cut half our position of the, we cut the full position of our swings, and we cut half the position of the new entries that we had bought as scalps. We went up, played around, came back down again, and at this point, again, if you look at our X account, I think we said something to the fact of like, there's no point in staying in something like too long for a couple cents of movement on the underlying or something like that. So once we got back down here and made this higher low, I believe it also made like a 1, 2 down, 2 up or something on the, oops, that's a 15. Let's go to 5 minute. Oops. No, okay, so it didn't do 1, 2 down, 2 up, but what it did do is basically start making a higher low. And so once we saw that, we got rid of the second half of our puts that we bought at open today, or with the lower high on the 1 minute, and we jumped into calls. Again, we put that on our X account. Once we got up to opening print, we sold half the calls, or actually, I think all the calls but one. We left one runner. Um, it played around. I could continue to go into the detail of, like, we kept higher lows and stuff like that. We did sell our runner at the month and quarter high, which is this 2584 marked by this green. Underneath is a yellow line to indicate the quarter, but we sold there, and we bought puts. Um, oh, actually, you know what? Because we waited till the end. Yeah, so we sold. I guess we had a couple of runners. We sold all but one here. That's what it was, because we sold our last call with like 30 seconds left to go in the day. It was kind of crazy. I don't think I've really waited that long to sell for a while. But going off internals, it just looked like it didn't make sense that we were pushing down. But we did buy the puts up around here. We held the puts just to hedge against the, we still have other calls that we're swinging in the account. So we wanted to make sure that we're hedging. And because of our entry on the puts, we were, I think, down like 4%. I'd have to go look on our puts by close, even with that push up. But just speaking of that push up, you can see here with that last 5 minute candle, if we go to, yeah, the internals, if we're looking at the internals, here's SOXL on the day 5 minute chart. Here's the tick Q, here's the vol QD, and here's ADQD. So this is like volume inflows and outflows. This is market breadth, and this is like essentially what it says, the tick, like how many stocks are ticking, how many stocks in QQQ are ticking up and how many are ticking down. So you can see we open the day in trend higher zone on the tick, open the day in trend higher zone on breadth. We didn't open it in trend higher zone on 80 on the volume, but we still opened positive, right? Zero line was down here, and from open we were pushing up. So although we had bought those puts, we knew they were going to be scalps just based off of internals, right? We got the big drop in ADQD, but that just had more to do with like the market catching up with overnight movement, right? So like there was short term downward momentum by the time the market opened, right? So we just rode that momentum and looked for the bottom to get out, which we were able to get out using our methods. And you could see that although the tick dropped, it came to zero line. It stayed above zero line basically all day, right? We had a little bit of downside pushes, and this right here was the end of the day push down. But that's what had me staying in the that last runner of the calls, because you can see, look, volume just continued to go up basically all day, especially at the end of the day it was pushing up. Breadth was opened in trend higher zone, and even though it dropped, it still stayed. It didn't even get close to the zero line, and after the drop, all it did was push back up or sideways and up the rest of the day. So by the end of the day, it was back in trend higher zone. So that's why I'm holding that runner, like, something, we're gonna get this end of day squeeze, and if we don't, so be it. We've made our profit, and I'll just sell this last contract, right before close at whatever it's at. But we did end up getting this squeeze in the last 5 minutes, because once again, the internals on the Qs were good. And again, not to say this is going to be one for one with SOXL, because these are for the Qs, right? And we're just trading chips. We're not trading all of Qs or even TQQ, right? We're trading just SOXL, which is a part of the Qs and a pretty big part of Qs. But look and remember, you got to remember, like Texas Instruments reported yesterday night, and they pooped the bed. I mean, they were down 13% today, just flat down all day, closed down 13%, and they are the number 4 holding in SOXL. So everybody else in SOXL can be doing well, but unless they're also doing super duper well, that 13% of the number 4 holding being down 13% is gonna weigh that ETF down. So it did lag the Qs, right? But the internals held true for us. it doesn't happen 100% of the time, but I'd say 90% of the time the internals for the Qs are going to be on par with SOXL. So let's go back to the chart here. So I guess that's enough of the small time breakdown. Let's go ahead and line up our 4-hour markers just to keep this the show going. There we go. Talking a little bit too much today. So let's remove our opening print. Let's move our previous low a day to today's low a day. Let's move this 4-hour down trigger to the low of the second 4-hour of today's action. Move this 4-hour trigger to the high of the second 4-hour of today's action, and we'll move the previous high a day to the high of today. Right? So that's simple. We've got that marked out. Let's just get the scalp chart taken care of as well. Let's activate the previous low a day, move it to today's previous low a day. Let's get this 4-hour downtrend. I'm sorry, not downtrend, 4-hour trigger to the downside. Right. Let's activate the 4-hour trigger to the upside, and we'll take the previous high a day and move it as well. And again, we'll move the overnight highs and overnight lows here in a minute, because those do come into play when we're trading, our scalps and intraday day trades. There we go. So our swing chart. So all our charts are back fresh, ready for tomorrow. Let's go ahead and fill out our notes so we know we have a plan for tomorrow's action, whether it goes up or down. Duplicate this note. So this will be Thursday, July 24th. These notes will be from July 23rd, and there will be 109 trading days left in 2025. The closing price was $25.78. $25.78, and we can see the week will turn green at $27.56. The month would turn red at $24.38. The quarter would also turn red at $24.38, but the year would flip green at $28.13. So we want that upward movement to get this week flipped green and this year flipped green, so that we have full time frame continuity to the upside. We can see the expected move for this week is $2.69. So based off of the close price of Friday, that would leave us $2.69 to the upside, would be $30.02. $2.69 to the downside from the close of Friday would give us $24.64. And if we go back to our chart, we can see that's what we've got here, $30.02 to $24.64. That's this purple box. So we're still within the week's expected move. Does it mean we can't go outside of that? No. It doesn't mean that at all. We definitely can, but as of right now, we're staying within that. So let's go back to our notes here. So let's get our 4-hour triggers plugged in. On the 4-hour to the downside, if it were to trigger the downside trigger, which means it would go lower than the low of the second 4-hour of today, that would give us a 2 up, 2 down, with the magnitude of the low of the candle prior to the 2. So the trigger is 25.38, and the magnitude, the low of this candle is 24.84. 24.84. All right, and if we want some downside targets, we can go 24.38, which is the flip for the week. I'm sorry, not the week, the month and the quarter. And if we want to go in a further extended target, we can go 23.73, which is the bottom of the range for March, which is a month where we had a major range kind of going on right before that drop in April. So we can see we've got a lower low on the day of 24.91, 24.62, and 23.58. All right, so that would be 2 up, 2 down. And this would be a 2 up, 2 up. Actually, this is a 1, 2 down combo 2 up. I forgot we had this strat that we closed in already. 1, 2 down, oops, combo 2 up. So that trigger would be the high of today, which is the high of the second 4 hour from today. So that would be 25.91, right? And we would have a magnitude. So 1, 2 down, 2 up. The magnitude is the candle to the left of the 1. So the high of the candle to the left of the 1 is 27.28. And we've already got that filled in. We've already got our extended targets, right? Those are still good from yesterday because we were able to pull the, the failed 2 down on the day, which is, if we go to the day chart, right? See, we've got the, oops, come on, Thinkorswim. You can see on the day we have the failed 2 down, right? It's a 2 down, but it's green. So it'd be a failed 2 down, which gives us the 1, 2 down, 2 up on the 4 hour, all right? So now if we go back to the day, there's a little cleaner picture here. If we go back to the day, and again, these are just short-term triggers and targets we already have in our notes. If you keep up with our videos, if you do the weekend video with us, you would see these. We set these on the weekend, so we have our week triggers and targets. At the beginning of each month, we set our month triggers and targets. At the beginning of each quarter, we set our quarter triggers and targets. And at the beginning of each year, we set our yearly triggers and targets. So since it's not a new year, we don't have to change those. They can stay as they were. It's not a new quarter. We don't have to change those. It's not even a new month, so we can leave those. The only thing that we change at the end of each week, while we're still in July, is the week, and then our day and 4 hour. Once we get to August, we'll change our August, but we'll still be in Q3, so we don't need to change anything on Q3. But stay tuned to our videos and watch our weekend updates where we set our longer term targets and triggers. But if we look at the day targets and triggers for tomorrow, if you have a strat on the 4 hour, if you have a strat reversal on the 4 hour, the magnitude is always the trigger for the day. So to the downside, we would have a 2 down, 2 down, because we already completed this combo 2 up, combo 2 down strat. That was the low here. We went below that, so we filled that. We don't want to get into too many more combos. We don't need like a combo 2 up, combo 2 down, combo 2 up. No, we don't need all that. So there's not really any other strats, reversal strats to fulfill on the day. It's just a continuation, right? If we're going to go to the downside, a continuation. So a 2 down, 2 down, 2 down, 2 down. Trigger being 24.84, which is the low of today. And since it's not a strat reversal, there's no magnitude. We only have targets. So we'll have our targets at 24.38, 23.58, which is last year's, or 23.50, which is last year's low. 23.58, that's that March range, right? So if it's going to 23.58, it's probably going to 23.50. So we'll just make that 23.50, which would be a decent drop, right? That's like $1.30. So today was 54 cents a move, which was 2%. So $1.30 would be like about 5% move, which would be a pretty decent move for the day. So I mean, SOXL will do more. It'll do 10, 15 in a day, no problem. But 5 would be pretty decent. I don't think we need to put any more extended targets on the day. If it does that, we're looking at the targets for the week here. So we've already got some that are lower. And actually, we do need to underline that to signify that we did trigger it. It's not bold because we're not still in we're not still below 24.91, but we did go below it at one point. So we triggered that to the downside and to the upside. We've already got our downside triggers and targets for the day. Let's just get our upside and we'll be done with our notes. So this would be a failed 2 down, 2 up, with the trigger being today's high, which is 25.91. Right, and this is, we'll just call it a failed 2 down, 2 up. The magnitude would be the high of this candle. Well, the magnitude would actually be the high of this candle, but our first target would be here, which is 27.28. So we'll just mark that a target comes first, 28. Then our magnitude up here of 28.50, which we've already got in, and then we've already got our extended targets as well. So if you keep up with our videos on a nightly basis, you'll know what these triggers and targets are. That's why we don't have to really fill them in too much. You see how easy it is if you stay up with it every night. That, yeah, you may have to fill in your 4 hours in your days, but most often than not, that's all you got to fill out. It doesn't take a lot of time, and you'd be surprised at how much time it saves you in trying to look for triggers and targets, you know, when price action is actually moving during the day, right? If you've got some notes to reference, it's basically a guidebook, right? This is our guidebook. At least for myself, this is my guidebook. This is because it's following my strategy, which is a combination of the strat along with the 4 hour markers, and this is an easy way to just make sure you're on top of the ball and ready for whatever direction price goes, because just like today, you can make money to the downside and to the upside, right? So if we go back to the charts, we're out here in the day, just kind of zoom back out again to just remember where we're at, remember what's going on. Overall still in an uptrend from like a week perspective. The day is starting to look a little bit more downtrendy, but it's not yet. We can't call it that just yet. There's this wider broadening that it formed early on. It's this small, more narrow broadening that it's formed over the last couple of days, last week, right? So we're just getting price action that's compressing, digesting this whole move up, right? This is kind of flagging out. So it's either, we're going to get this sideways action. We've got this overhead supply. It's going to be hard to get into. We're trying to flip the year green. We're trying to defeat this monthly downtrend line. We're trying to defeat this weekly broadening formation. We got a lot of work to do to get to the upside, and even when we go to the upside, we're going to have to contend with this daily broadening formation and break through it as well. So if we do that, we should definitely see, like we've been talking about in our previous videos, the 32, 33 range, and then back up to the 35, 36 range, possibly even seeing 40. But remember that we're coming into a point of the year where seasonality is not in our favor, to kind of put it that way. It's basically September, August to September, September to October, usually the worst performing months for tech throughout the year. So just remember that as well. We've got a gap down here. We've got the 50-day moving average down here. We've got a lot of room that we can put in a pullback and still not damage things to a point, right? Yesterday we also talked about, remember we talked about yesterday a possible 3, 2 down, 2 up on the week to continue back to the upside, right? So we got the 3. We could close out, further extending the 3, or just close out how we are now, get a failed 2 down next week to maybe go close the gap, go wick down, close the gap, and then finish back at the end of the week up here in a hammer formation to get the 3, 2 down, and then the 2 up in 2 weeks. This week could hammer back up, possibly even flip green. If we get a green 3 hammer, that's a pretty bullish sign if you ask me. Very bullish sign. I would probably take some longs at that point, because even if you get a 3, 2 up and the 2 down, you still get the 2 up, and who knows how high 2 up goes. We have ideas of where it could go because we have our notes, we have our markers, so we can try and get a little bit more to the upside before we would get downside action. But either way, a green 3 hammer on the week would be pretty darn bullish if you ask me. So I wish I could give more as far as it's 80% we're gonna go this way, or 70% we're gonna go this way. But at this point in time, it's just not that way, and that's what you have to deal with sometimes as traders. And um, you know take when you get into times like this, you can take profit on you know calls that you have that expire in like a month or two. Maybe leave the ones out there for November, December, January 26, January 27. Let them kind of hang out and see where price goes. You can, like we've already done, line up your targets and levels for the downside, being ready for that. But um, just staying patient. That's the key. If you just really have to trade something, get you a good setup on a scalp or a day trade position. Make sure you're following your rules. Make sure you're not breaking any, and you've got your stops, and you're not taking big losses, and have your hand at those. But don't deplete your portfolio if you're not doing well. Just follow us on X, at Bullish Chips. Just follow along with what we're doing, mentally, and kind of help train your brain. As far as our method, again, we're not financial advisors, but we do think our methods can help people, and so we like to let them assess it themselves. And if they choose to put it into play, they put it into play with their own little tweaks on it. So if you've liked this video, make sure to give us a thumbs up. If you have any comments, definitely leave us something in the comment section. Be respectful, of course, please. But I'm always open to dialogue or criticism, constructive criticism. If you're seeing something else in the charts, let us know. I'd hate to be missing something, and I'm always open to other people's opinions. So SOXL is just one of our many investments, but it's one that we like to stay on top of. So if somebody else has a different opinion, let us know in the comment section. But again, make sure you're subscribed, hit the notification bell so you know when we release our videos, and hit the like button. And we'll see you tomorrow. Have a good rest, and be prepared for tomorrow. Happy trading.